Welcome to the daily update, where I'll go over the action in the market for Monday, November 18th, and we'll see how things look for Tuesday, November 19th. Saw a bit of a bounce, but internally, we're not seeing much of an improvement. We're still positive when we measure things by moving averages, but we're still looking negative when we look at the inside of the S&P and other indexes. We'll have to see if we're going to get more of a bounce out of this. So far, as I said, the 20-period moving average is still holding, and that's a pretty significant level. So if we can stay above that level in the short term, we still remain positive. Before I get started, there's a thing called the SPXInvesting Program. I developed the program. It's up, it's going. There are links that'll take you to a video or to the website below this video. One benefit is that you get early access or immediate access to the videos as they are prepared, where I hold them back on YouTube or Rumble. If you have any questions, here's an email address where you can contact me. Also, I just finished over the weekend doing the weekly videos, but all of those are meant to tie into the daily video. Okay, let's go back and talk about what happened. We had a slightly higher open. The futures were a little bit positive, but right after that, we saw some selling, but we found support at the unchanged level. And then from there, we were able to rise above the daily pivot at 58.80. We got all the way up to R1 at 59.06, a little bit above the 5,900 level, but that didn't last for very long. Prices pulled back from R1 and chopped sideways, and we ended up closing slightly below 5,900. We were up 0.39%. This is still encouraging, above average volume on an up day. What we've been seeing over the last, well, pretty much since the election, up days, volume goes up, down days, volume goes down, and that's more positive in the background. We are still positive in the short, intermediate, and long term as measured by the moving averages. Interest rates came down just a little bit on Monday, and that gave support to stocks, and the dollar coming down too also helped a little bit there. We did get our inflation reports last week, CPI, PPI, and the market really didn't like that as much, and so it's not as much of a given that the Fed's going to come in and cut rates at the next meeting. Over the weekend, geopolitically, there was an announcement that the U.S. is going to stop the restriction of Ukraine sending more powerful missiles into Russia. Okay, that could really escalate things. And Putin may end up blaming the US, which could cause some problems, and he could end up blaming NATO, which could cause some problems. Is this just rhetoric? Is this just talk going back and forth? I don't know. Putin has a tendency to not bluff. So we'll have to see if this causes some more concerns. The market didn't even pay attention to this that's happening. So we'll have to just see if that develops into something that does impact the market. And then there are things going on between Iran and Israel too, but it's not hitting front page news, at least websites, at least right now anyway, but it's still back there. And there's really been no fallout, at least to this point, concerning the US election. Now all the big pop news is about the cabinet posts and all the back and forth. And there was the big fight over the weekend. So yeah, okay. Some comments. Large caps and semis did outperform in Monday's session. They had seen some weakness, and we're keeping an eye on the semiconductors right now. They've actually generated kind of a weak death cross. The moving averages are kind of going sideways right now, but the short term has dropped below the longer term, and that's a huge thing to keep an eye on. If they turn more negative, they're a huge part of tech, and tech is a huge part of the overall market. So unless they can get that back and start to see some continued improvement in that area, that's a bit of a concern that we're watching. We're still above the 20-period simple moving average, so the short-term trend continues to be positive. Keeping an eye on what's happening in the Middle East, and oil is bumped up a little bit. We're in the 69 range now. We only have on the intermediate term list the Sean trend meter. Even that's going sideways, and that's not really extreme right now. All of our short-term list is gone. Our long-term list is pretty much gone for right now. So we're not dealing with an overbought or extreme positive or negative condition right now. And then there is some doubts that are starting to come into the market that maybe the Fed won't be able to cut rates 25 basis points at their next meeting in December because we're getting these stronger than expected economic reports. And we'll have to see what the trend is going forward there. The dollar was down and interest rates were down. This did give some support to stocks. We closed at 4.41% with the 10-year yield, where we had been at 4.43% after Friday. We're getting close with the 10 to the 3 month, but we're still inverted, where we've already gone uninverted with the 10 to the 2 year. Sentiment ticked down, even with the update. We're right at 50 now, right at that tipping point. Above 50 is positive, below 50 is more negative. So we'll just see the market's a little bit not sure how it feels right now, but we never got extreme positive even after the election. We are still negative with our trend. Last week, the red line crossed above the green line. We're in a weakening trending environment since we're below the moving average, but we're still above 20, so we are trending. But right now, I'm keeping the bias at mixed, even though we had an update, and I have to turn on my pointer here. We had an update. Internally, we didn't see really any improvement that was coming back into the market. So, and I'll show you that when I go through the charts. So that's why I'm keeping our bias at mixed. Usually it's just if we have an up day or a down day. Well, I did it a little bit different for this particular video, and I'm still keeping our momentum at negative. Okay, we did only get the NAHB Housing Market Index. It came in at 46. They expected it to come in at 43, like what we saw last time. And here's a chart where since August, we're seeing this going back up. And then if you like trend lines and you design them, you may either agree or disagree with this chart in the way that they actually drew these lines on here. But this is supposedly a trend channel going back to the October 2022 lows and how we've been going up since then. And yeah, we've fallen down below. We peaked our head up a little bit higher here, but we're coming right up to the upper end of this particular trend channel, which is probably a parallel trend. They probably use the bottom line to set up the trend line, but I don't know. Does this really meet the criteria? It's supposed to go from low to low, not to what looks good on the chart. And then did a parallel line with that. And I have a trend channel that I went over in the weekend video that does the same thing, but this could be causing some overhead resistance. We're seeing a similar thing to that with the longer term trend channel chart that I show going back to 2009. And so we're also hitting some resistance there. And then looking what's going to happen if we have 60% tariffs for Chinese exports, it's going to hurt their economy, according to Goldman Sachs, and that's why they're predicting things to actually go down. Short interest. These are folks that go in and basically set up positions that benefit if the S&P goes down. It's only at 1.8% right now. Well, there are two sides of a transaction. When you set up a short interest position, you sell to get in with the hope of buying it back at a lower price later. That's how you make money. Well, there's other alternatives to that now. There's inverse ETFs and mutual funds where you don't have to take on the risk of actually doing this. So we're not really seeing short interest as popular as it was before because there's other vehicles that I feel are much better alternatives of taking advantage of things when they go down. But on the positive side, this 1.8%, if we start to shift and go up, these folks have to come back in to buy to close out those positions. And if prices are just going up and they seem to be out of control to the upside, that's often a short cover rally or a short squeeze. It's all these folks that are now losing money and they have to buy to close out their positions. And then valuations, yeah, we're looking kind of high here. Stocks and bonds combined have rarely offered such low yields versus inflation. That's kind of what we're seeing right here now when you take yields from government bonds anyway. That's why a lot of folks are gravitating over towards junk bonds. They see economic things looking okay. They're willing to assume that risk to get a higher yield. And so they're not really jumping in to a lot of government bonds right now. And this chart is just the 10-year yield minus CPI and where we're coming in right now and at very low readings with that. And then core inflation, this just shows the different parts of CPI and what it makes up and what is causing a lot of the inflation currently. So you get more of a graphical visual representation here. And then the dollar climbs to a 2-year high. This is really going up right now. And again, I kind of addressed that over the weekend where the election at least gave the market some confidence that there's still integrity in the whole voting system. And the fact that Trump won the popular vote and the Electoral College, that also produces some integrity there. And he's a businessman, and so he might do businessman type things, which the economy tends to like that. You put that all together, and then it tends to increase the value of the currency. And this is the spot index. This is cash. This is not futures looking down the road somewhere. This is what we're looking at right now. And we're still in a downtrend as I measure trends with the 50 and 200-day moving average, but we're above both of those lines. And the longer we stay above them, we could shift over to an uptrend. But this was more advantageous if you want to take a trip to Britain because the British pound's been going down, or to Europe, or to Japan because the yen's been down. Even though they're still in longer term uptrends against the dollar, we've been seeing a real bounce back up here. And then I did find this. This is kind of a similar version to a chart that lately I've only been showing on the weekends. If you watch the weekly video, we look at the spread between risky and not as risky bonds. Well, this actually breaks them out and shows you. And I said over the weekend, well, look, and then I have an inverted version of this same chart. And on the inverted chart, we're getting a very high reading, which means there's just not much risk right now. Well, are we getting too much of a good thing here? Because it shows that risk is so low based on what we've seen in the recent past that maybe it's getting too low. It's kind of like sentiment. When there's really just no fear in the market, that's usually when we use this as a contrarian indicator. And I didn't point that out over the weekend, but I'm seeing this here that there's no fear, but at the same time, maybe it's looking a little too good with this. And then Jay Capel, I think that's how you say his name. He works with Sentiment Trader, an excellent website that I would highly recommend. They have an aggregate signal model. And when we're in the green area, like we are now, that tends to be more positive. When we drop down to the red area, that's negative. And he says the aggregate the aggregate signal model remains favorable. Does that mean clear skies and smooth sailing? Not at all. It does, however, suggest ignoring worrisome news, like World War III potentially happening, and continuing to give the bullish case the benefit of the doubt, in my opinion. Okay, that's an opinion. So we are going up overall. If we take out what he's putting into this, we are still looking okay when we look at the total aggregate signal model, according to Sentiment Trader. All right, here is the chart here where we did have a little bit of a higher open and then we dropped down, but we were able to maintain things above the unchanged level. And then we started to see some strength. We got above the daily pivot and then boom, we ran right into R1. That's why I post these charts on the YouTube community tab every day. That chart was there since I made the video on Saturday. And so you can see these levels there even before they happen. So we're not caught off guard by this. And a lot of the algo trading, the computers that trade instead of people, it's all programmed into those things. And they came up here, we hit R1 and then, okay, now start selling. And that's kind of what happened. We just drifted and chopped sideways, but we did fall back down below the 5,900 level here. Here's the intraday chart. We're up about 0.25% when the last time I checked the futures, so that's looking fairly good here. But we were fairly quiet as we closed things on Friday and then came back over after the weekend. And we did see the initial move up here and then pull back. And then again, we're up slightly in the after hours market. I pointed this out over the weekend where we're looking more positive if the blue line is above the red line. Well, now the blue line's kind of right on top of the red line here. We want the blue line to be above this when we look at large cap growth versus value on a 10-minute intraday chart. This really going up is more positive for the market. This coming down, of course, when they're both going down, that's negative for the market. And then back in about or right around Halloween is when we saw this bottom out and really start to go back up. Well, lately this has been coming under some pressure again. So we're not as solid with the growth to value ratio where we had been just a few trading sessions ago. And this is one of the areas that when I say we're not seeing much of an improvement internally, this is one of the charts I'm referring to. End of day, we were up less with growth. When we look at the large caps, where value was up more, we were up a little bit more with the mid caps and up with small cap growth to value, where we were unchanged with small cap value. Okay, so we came back up just a little bit. We're still on a longer term downtrend with small cap growth to value. And mid cap growth to value still in a downtrend as well. Still in an uptrend with large cap growth to value, but not really showing much of an improvement here, but not falling apart either. And still at the high end of the rainbow when we compare the growth versus value ETF and take a ratio. Discretionary coming down a little bit, but still overall it's been looking pretty solid when we compare discretionary to staples. Large cap growth was up 0.44%. It had been declining with everything else, but still is looking solid, but in the short term, a little bit more vulnerable. This is not a really good looking set of bars that are playing out here. So our trend is still negative. Even though the red line came down, it's above the green line. That means we default to negative. The ADX is going down below the moving average. That's a weakening trend. We're still above 20, so we still are trending. And we're seeing pretty much that same thing in the short term. Red line going down, green line going down, ADX going down, still slightly above 20. But volume did tick back up above average. Now, last Friday was options expiration for the monthly cycle. And so we saw a pickup in volume due to that. So to see above average volume in Monday's session on an up day, that is more encouraging. And we've seen this as we were going up, volume would increase. As we were going down or sideways, volume would decrease. And that tends to be more positive there. Here is the weekly chart. We're coming in at 81.3 with this sentiment gauge here. It's still suggesting that we're extreme, where we're not seeing that. We're neutral on the charts that I look at. And coming down a little bit here, but still above this black line here with the legal insider transactions ratio. And coming down with everything else is the insider buying ETF. It's pretty much been going sideways. It looked like it was breaking out there for a while. Now it's coming back down to its 50-day moving average. The Ulcer Index is still slightly above its moving average. There's still fear being picked up by this indicator. We ticked down just a little bit with the VIX on the line chart as well as the bar chart. And the VIX of the VIX also declined with the bar chart and the line chart. Fear subsiding a little bit with the up day. We still have the momentum overall going down with the VIX, but it's starting to turn back up. But it hasn't crossed over to being an upward momentum yet. And here's the historical chart that I've been showing, where typically on a seasonal basis, we tend to decline with the VIX throughout the rest of 2024 historically. Doesn't mean we'll stick with that, but that's usually what happens. So we were pretty much flat with this fear gauge, and we were flat with this other fear gauge. So not an awful lot was really decided there. We did decline with the equity put call ratio on the daily chart, but we're still going up with the 5-day chart, and we're still going down with the 10-day chart. Seeing some mixed signals there. Came up a little bit with the volatility risk premium, but we're still underneath the band. So not a real increase in fear according to this chart. And saw a little bit of an improvement here with the advanced decline line based on price and volume. And still longer term looking good. We're above advancing moving averages. Really declining here with the 5-day. We're seeing a drop off in the new highs, a little bit of an expansion on Friday with the new lows, a little bit less in Monday's session. So we're kind of leveling out here with the 10-day. And we're still negative with the smart money indicator, the first one here, the accumulation distribution. We're still below the moving average. So that's negative there. We came back, we're just a little bit negative in the short term with the 19-day advanced decline ratio. We're a little bit above the zero level here with the 39-day advanced decline ratio. Still not really showing much of an improvement here with the chicken money flow. We're continuing to be negative, and the red line continues to go down. So smart chart number 2, or smart money chart number 2, continues to be negative, and we're also still declining with the chicken oscillator. So 3 out of 3 of our smart money indicators continue to show weakness. We saw a little bit of an improvement with the vortex, with the green line going up, but the red line also went up as well. But this is still positive with the green line on top. And not much of a change here with the cumulative advanced decline line for the S&P based on price or volume. And a little bit of an improvement here with the NYSE cumulative advanced decline line. Still below the moving average with the regular NYSE advanced decline line. And a little bit of an improvement here, not much of a disconnect yet anyway, between the S&P and the NYSE advanced decline line. And then the other NYSE advanced decline line still below the moving average, showing some more broad market weakness for right now. Common stock, a little bit of a tick up based on price and volume, not a big change there. Still below the moving average with the advanced decline line for the NYSE common stock, bouncing up a little bit off of the moving average with the S&P. Mid caps are on the moving average and small caps are below the moving average. A little bit of a tick up with those stocks above their 20-period moving averages. We're still above 50. And with the 50-day moving average study, also still positive there. A little bit of an uptick with the 100-period moving average study and the 200-period moving average study. So short term, we're still seeing that this other dashed line here, which is a pivot point, that's still holding for the time being. And that's right around the 20-day moving average, the simple moving average or so. So there's pretty significant support there that so far has been holding. And even though we dropped off from Friday's level, we're still above average with volume. A little bit of a tick up with the 20, 50, and 200 period moving averages. Ticking up a little bit, but not getting extreme with the Stochk RSI, the Williams percent R, the CCI 14, and the CCI 20. Then we usually get this on the list all the time, but the stochastics in the short, intermediate, and long term, none of them are extreme right now. Force index did bounce up a little bit, but it's still slightly negative. Looking at the condition of the short-term trend, we're still below the green line and the blue line now. We want to get back above those to have things turn more positive. The longer we stay below this, that makes the short-term trend more vulnerable. But we're still above the simple moving average, and we were actually able to get above the exponential moving average here with the 20-period moving average study. A little bit above the midpoint with the Keltner bands here. And in the intermediate term, turning up, but still negative with the balance of power. Looking at the condition of the 50-period moving average, we're still below the red line and the blue line. Same thing that I said for the 20. The longer we stay below this, the more negative it may become. Switching over to more negative with the go, no go with the lighter blue bars. We're just a little above the midpoint with the highest high, lowest low value. We're still looking more negative here with the TTM squeeze with the darker blue bars now. Coming down, but the standard deviation is still above the moving average. And we're right a little bit above 0.83 with the ease of movement. So that's slightly positive. The Arun has not changed. It's above 0 with the oscillator. That's still positive for now. Saw a bit of an improvement with the S&P McClellan oscillator, but still below 0. So when that happens, we're still declining with the summation index based on price and volume. That's part of the other observation that I was making, that we really didn't see any improvement here. I mean, it improved a little bit, but not enough to turn it positive. Also, a little bit of an improvement here with the broad market. The NYSE McClellan oscillator did tick up, but still below 0. So we're still declining with the summation index based on price and volume for the NYSE. Still negative with the Swenlin trading oscillator based on price and volume. Momentum is starting to turn more negative now. The PMO is coming down, hasn't quite crossed below the moving average, where we're below the moving average based on price. We never went above the moving average based on volume, and looking more negative there. Little bit of a tick up with the PMOs that are rising. We're now going flat with the buy signals and flat with the PMOs that are above 0. The short-term momentum is still positive here. We're still above the moving average with the slope oscillator, but the MACD is really coming down and starting to cross below its moving average. So we're looking okay with the slope oscillator, but the the TSI is now crossing below its moving average. Where we're seeing more weakness here is in the intermediate term. These momentum oscillators are starting to cross below their moving averages, where the tricks in the KST longer term, they are still positive. And the Copic curve is still positive, rolling over just slightly. And this is the Sean trend meter, still in this green area here where it's going sideways, where that's considered extreme, but not as extreme as it was before. The money flow is still above 50, where the ultimate oscillator is still below 50. Still above the moving average with on-balance volume. Still above 50 with the RSI 14, just barely crossing back above 50 with the RSI 9. And we're still negative with the Elders impulse system for the S&P. We're still positive with the parabolic SAR. And we're still above the shorter term moving averages here. And the bullish percent index continues to decline, even though we're above 50. So technically it's positive, but the context is that it's still going down. We're also declining with the NYSE bullish percent index and the NASDAQ 100 bullish percent index. So these measures didn't improve in Monday's session, even with the up day. We're still battling around this 20 period simple moving average of the open, high, low, close. We're coming up into the top end of that now. And we're still looking more negative with the hike in ASHI. We're positive, but pointing down with the KG chart. We're negative with the Renko chart and turning more negative with the 3-line break chart. So really no improvement there. Coming back up just underneath this red line with the 150, and we're right on the red line with the 200-day simple moving average. We're positive across the board, except the NASDAQ 100 is still negative in the short term. And the bonds based on price are still negative in the short and intermediate term. Commodities have now switched to positive in the short term. We're still negative with the dollar in the long term. And we had all of the sectors ended up being positive except for industrials. Energy was bouncing back up here. Communication, discretionary. We want to see this. We would like tech to have done better, but it was up on the day. And so we saw an awful lot of red to begin the day where the NASDAQ just kind of, it was negative for a lot of the day. We went below 18.7, then we got back above 18.8, 18.9, 19,000, 19.1. Then it went back above 18.7 again here. Canada's still doing pretty good. The energy sector had a BPI cross above 50. The NASDAQ got above 18.8. Canada set another new all-time high. And we got the S&P above 5,900, but it didn't close above 5,900. And the utilities, this has had a bullish MACD crossover now. That's more defensive typically. Not really seeing much of a difference between the weighted and equal weighted version of the S&P right now. The Dow ended up being down 0.13%. And we're still neutral with the diamonds when looking at the Elder's Impulse system. We're back above this R1 level here for the NASDAQ 100. So that level was recaptured. And this was holding on to support for the NASDAQ itself. We were able to close above this R1 pivot point here. And the pivot points seem to be pretty important for the NASDAQ and NASDAQ 100. Since the NASDAQ has now been outperforming the NASDAQ 100, this has kind of shifted to a little bit more importance to keep an eye on. The Qs are still negative, though, when looking at the Elder's Impulse system. The momentum is now turning negative for the NASDAQ 100. And we were able to come right back up to the 20-period moving average with the QQQs, just a tick or so above that. Small caps, of course, they had to be down here. They're dropping down below this R2 pivot point now, but they were virtually unchanged, but still negative. And we're coming right back up underneath the 50 level with the Russell 2000 small caps. It's kind of interesting. You look at this chart, we were down. You look at the Russell 2000, we were up. So there's a bit of a contradiction there. And the momentum is starting to turn negative with the Russell 2000 small caps. We're still negative with the small caps when looking at the Elder's Impulse system. We were up slightly with the mid caps, but they still remain negative with the Elder's Impulse system. A little bit of a bounce here with the Wilshire 5000 and a little bit of a bounce with the total US stock ETF. Financial sector looking good here, coming back and just getting near all-time highs. The FANG index was up 0.61%, still above its 50-day moving average, still below this shorter-term trend line, still above this longer-term trend line with the FANG index. Apple was up 1.34%, slightly above its 50-day moving average. Amazon was down 0.45% after hitting an all-time high. Microsoft still wondering if there's going to be a death cross here, but not yet. It was up slightly. And Google was up 1.63%. Came really close to a death cross here, but so far we've been starting to turn up with the moving averages. Meta up 0.6%, still below its 50-day moving average. NVIDIA, they're going to report earnings after Wednesday's close. So there's going to be, it's like an event now for the stock market. And then Tesla was up 5.62%. Not at an all-time high here, but showing some improvement after seeing some profit taking. Netflix, they had that fight over the weekend that apparently Netflix raked in a lot of money and the stock went up. I don't know if that's a reason, but this is still looking pretty solid here. And seeing a little bit of an improvement between US and world stocks on a short-term basis. Longer term, the relationship is still declining. Oil is now up into the 69 range. We're watching that for geopolitical reasons. The dollar pulled back. It got up into the high 106 range. Now it's into the 106.23 range. And we were down with the 10-year yield. That did help stocks. We were up with the 10-year based on price. And so we're not really seeing much of an improvement here. The Qs to S&P still below the moving average. Discretionary to S&P still looking pretty good there. We're still below the moving average with large cap growth compared to large cap value. So the large caps are still under the moving average, coming down but still above the moving average with the mid caps and bouncing off the moving average with the small caps. So what's our outlook for Tuesday? As I said, NVIDIA will report earnings after the close on Wednesday, and that's going to be highly anticipated, and the market will probably really react to that one way or the other. We're still positive in the short term as measured by moving averages. We're looking at some negative seasonality that I'll show you in a moment here with the Stock Traders Almanac. But longer term, in the more intermediate term, from now until the end of the year, we do have positive seasonality. And at this point, we're still just calling this a pullback. Even though we bounced up a little bit, we haven't really improved, but we haven't turned over officially negative yet either. We're going to get housing starts and building permits in Tuesday's session, and that's it. And then keeping an eye on the geopolitical things and what's going to happen there. All right. And then on Wednesday, we'll get the MBNA mortgage. We get that every week. Then we're going to get weekly jobless claims on Thursday, as well as LEI, the leading economic index. And then on Friday, we'll get the global manufacturing and services PMI, as well as consumer sentiment. Here's a look at the chart or the calendar here for the upcoming week, the things that are thought to be most influential. Then seasonality, we're negative across the board for November 19th with the Dow, S&P, and NASDAQ. Now we're into the week after options expiration, which tends to be more positive than the week of expiration. We're up 63% of the time, down 37% of the time. And this is what I'm talking about from Stock Traders Almanac, where we have a few days in here of some potential negative seasonality. We'll see if that ends up playing out. But longer term, we're still looking better from a seasonal perspective. Tuesday is a coin toss based on what happened in 2023. It's the least up day so far in 2024. And now we're coming out of the negative time. Excuse me, the negative time still has a few more days to go here, according to Tom Bowley's research. I have to calculate the weekends into this whole thing before we tend to look stronger going into the end of November. This also suggests positive seasonality here, according to the Carson chart. This is after an election, positive seasonality. This is what happened back in 2020 after the election. So we're still concerned about our smart money indicators. They are negative across the board. The NYSE and NYSE McClellan oscillators, as well as summation indexes, are going down, even though they bounced up. The McClellan oscillators did in Monday's session. Swenlin trading oscillators negative. And we still have the equity put call ratio based on 5 periods. That's still going up, with the 10 days still going down. We're starting to see some weakness in our oscillators. Now, the Copic curve is still positive, but we're rolling over except with the longer term oscillators for the moment. And the ultimate oscillator is positive. We're turning more negative here with the PPO. And let's see. Then the positive signs are the vortex. That's still positive, and it did improve a little bit on Monday. The growth to value as well as discretionary to staples ratios for the large caps are still holding up for the time being. And the 10-day equity put call ratio is going down. The advanced decline lines for the S&P, we're bouncing up off of that. And our 20, 50, 100, and 200 period moving average studies, all of those are still above 50 and showed a little bit of improvement on Monday. The parabolic SAR and the bullish percent indexes, they're positive, but they're declining. So the context is that they would actually be more negative right now. The ease of movement is positive. The money flow is positive. The financial sector is positive as well. So our conclusion, I haven't changed it from what I came up with after Friday. We're still positive. We're looking more intermediate term positive, but short term possibly negative seasonally wise. And right now, this is still just pulling back. And that's where we're at right now, pulling back, but above the 20-period simple moving average. Intermediate term, we're still seeing that weakness that's developing, but we remain positive since we're above the 50-day moving average, and we continue to be positive well above the 200-day moving average in the long term. Thank you. I hope you found this helpful. I really hope you have a great day, and I will talk to you in the next video.